Hi guys, welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. In this video, we will talk about Vanguard Index Funds for Beginners in 2022. So make sure to watch the full video. The best Vanguard Index Funds for 2022 won't be a rinse and repeat of 2021. Many of the old standbys from last year focused on ideas and strategies that worked well in a low interest rate environment, like an overweight exposure to the growth tech sector. But with the Federal Reserve expected to raise its benchmark interest rate several times this year, strategists predict turbulence for mega-cap tech stocks, and indeed, they've already suffered mightily early on in 2022. The end of 2021 saw the start of a rotation out of aggressive growth and into value stocks and defensive plays, and that's largely expected to continue as we move deeper into 2022, as long as inflation remains a major theme. But as 2020 and 2021 reminded us, the economy and Wall Street alike are capable of completely blindsiding us. It could come from wild cards we already know to watch out for, such as another variant of COVID-19 or a Russian invasion of Ukraine. Or it could be a new black swan. Either way, it pays to be flexible, and that means having flexible options. With that in mind, here are the 7 best Vanguard funds for 2022. This list of a dozen funds should help you leverage or protect against the major themes of this year: volatility, rising interest rates, inflation, and a slow year for mega-cap stocks. But they all have one thing in common: Vanguard's signature low fees. 1. Vanguard Global Minimum Volatility Fund Investor. Hands down, the most apropos way to begin our look at 2022's best Vanguard funds is the Vanguard Global Minimum Volatility Fund Investor, VMVFX, $14.28. A risk-on market has slowly become much more risk-off, potentially leaving some investors wondering what to do with their international exposure. Vanguard Global Minimum Volatility Fund is one solution, either as a long-term core holding or a temporary stabilizer. The fund's manager evaluates all of the stocks in the FTSE Global All-Cap Index and builds a portfolio from components expected to generate lower volatility than their peers. Also, VMVFX tries to further reduce portfolio volatility by heading most currency exposure back to the US dollar. The Vanguard Global Minimum Volatility Fund is not exactly a household name among boggleheads. It has only been around since late 2013, which is young for a Vanguard fund, and has built up $2.7 billion in assets since. While past performance is no guarantee of future results, you can get an idea of how the fund might perform across a volatile 2022 by looking at what it has done over the past few months. Year-to-date, VMVFX is beating 83% of its category peers, and it's even better over the past 3 months, topping 91% of its peers. However, results aren't as great over the longer term. During the trailing 3- and 5-year frames, which were primarily bullish for stocks as a whole, VMVFX is near the bottom of the category. That's a frequent trade-off with minimum and low volatility funds. Superior results during the less frequent occasions where the market struggles, but suboptimal performance over long, predominantly bull periods. As for what's under the hood of VMVFX, remember, it's a global fund, which means it's international, but includes the US currently. The portfolio is roughly 60% US and other North American stocks, while the remainder is spread across multiple regions, including the Pacific, 18%, Europe, 12%, and various emerging markets, 8%. Top holdings include enterprise software name Tyler Technologies, TILE, blue-chip pharmaceutical firm Johnson & Johnson, J&J, and freight operator C.H. Robinson Worldwide, CHRW, each of which carry a weight of less than 2%. 2. Vanguard International Value Fund. The Vanguard International Value Fund, VTRIX, $41.61, earns a spot among the best Vanguard funds to buy in 2022 for a reason that can be boiled down to one word: valuation. In an environment where mounting uncertainties over inflation, rising interest rates, and high-priced U.S. stocks are causing volatility. Many investors are increasingly becoming more risk-averse, instead seeking out higher quality and more reasonable valuations. That includes in international stocks. Foreign stocks, especially developed markets, tend to be cheaper than their U.S. counterparts, and you see that play out in VTRIX. The weighted average price-to-earnings (P/E) ratio for Vanguard International Value Fund's 206-stock portfolio was around 15 in late January. That's far less than the 25 P/E for the S&P 500, and less than the roughly 16 P/E for the U.S.-centric Vanguard Value ETF, VTV. VTRIX's heaviest weight belongs to European stocks, which account for a little more than half of assets. The Pacific and emerging markets account for another 20% each, and most of the remainder is invested in North America. Top 10 holdings include familiar names such as South Korean electronics maker Samsung Electronics, Chinese e-commerce giant Alibaba Group, BABA, and Swiss drug manufacturer Novartis, NVS. 3. Vanguard Healthcare Fund Investor. The Vanguard Healthcare Fund Investor, VGHCX, $210.54, takes a broad approach to healthcare stocks, investing in various sectors both in the U.S. and abroad. This provides investors with the sector's typical defensive attributes. Pharmaceutical stocks make up the biggest chunk of the portfolio at about 40% of assets, but VGHCX investors are also exposed to biotech, 19%, health insurance, 14%, healthcare equipment, 13%, and several other industries. There's also geographic diversification, as a good third of the Vanguard Healthcare Fund portfolio is invested in international stocks. This blend is well evidenced in its top 10 holdings, which include the likes of America's United Health Group, UN, Pfizer, FE, and Eli Lilly, Eli, the UK's AstraZeneca, AZN, and Switzerland's Novartis, NVS. One caveat is that the buy-and-hold approach from Wellington Management, Vanguard Healthcare's fund advisor, tends to produce average returns compared to its peers. However, it also tends to produce a below-average risk profile, which is why we like VGHCX as one of the best Vanguard funds for 2022. 4. Vanguard Real Estate Index Fund Admiral. The Vanguard Real Estate Index Fund Admiral, VGSLX, $150.85, could easily follow up a strong 2021 with a healthy 2022. Real estate tends to perform well in high inflation environments, and other macroeconomic trends supportive of real estate and real estate investment trusts, rates, remain in place. In general, tenants should have an easier time paying rents in 2022. But certain industries, such as senior housing, gaming, storage units, and lodging rates, could enjoy a particularly brisk recovery. Also attractive even amid a rising rate environment are rate yields, which typically sit around 3% to 4%, far more income than most investment-grade debt at current levels, and enough to still look good even if interest rates head higher several times this year. The VGSLX portfolio is a basket of rates that invest in various types of real estate, from office buildings to hotels to self-storage units, and a lot more in between. Top holdings include telecommunication infrastructure rates American Tower, AMT, and Crown Castle International, CCI, logistics specialist Prologis, PLD, self-storage facility operator Public Storage, PSA, and retail rate Simon Property Group, SPG. 5. Vanguard Energy Fund Investor. The Vanguard Energy Fund Investor, VGENX, $41.64, is off to a hot start already this year, and it could be one of 2022's best Vanguard funds if energy maintains its path. It's certainly expected to, given accelerating demand, constrained supply, and geopolitical issues popping up right and left. Demand for crude oil in 2021 recovered faster than expected from peak pandemic levels as economies rebounded from the COVID-19 slowdown. Robust economic growth and continued recovery in air transportation in 2022 could drive global oil demand above even pre-pandemic levels. The Organization of the Petroleum Exporting Countries, OPEC, appears to remain vigilant in keeping a tight grip on output to prop up pricing. Should that persist and combine with increasing air travel, trucking, and consumer demand, we could see even higher oil prices across 2022. Thus, funds heavy in oil and energy stocks, such as VGENX, are expected to do well in the year ahead. Vanguard Energy specifically is heavy in utilities and the integrated and upstream oil and gas industries. Top holdings in its 42-stock portfolio include big energy names such as ConocoPhillips, COP, UK Dutch firm Royal Dutch Shell, RDS.A, and France's Total Energies, TTE. If you want to stick with the best Vanguard funds to ride the energy wave in 2022, then VGENX is a simple way to do so. 6. Vanguard Dividend Appreciation Index Fund Admiral. The Vanguard Dividend Appreciation Index Fund Admiral, VDAX, $44.15, is a passively managed portfolio that focuses on large-cap U.S. companies with the potential to grow their dividends over time. This means shareholders get a heavy dose of high-quality value stocks, which are broadly expected to outperform growth in at least the first half of 2022, if not longer. What makes VDAX one of the best Vanguard funds for 2022 is a combination of extremely low expenses and attractive risk-adjusted returns. Vanguard Dividend Appreciation Index Fund, which charges a mere 8 basis points annually. A basis point is 1/100th of a percentage point. Tracks the S&P U.S. Dividend Growers Index, which consists of common stocks of companies that have a record of increasing dividends over time, according to VDAX's prospectus. That results in a portfolio heavy in value stocks, though it does also include high-quality growth stocks that grow their payouts over time and typically don't stretch financially to do so. Medicaps such as Microsoft, MSFT, Home Depot, HD, and JP Morgan Chase, JPM, are among top 10 holdings. 7. Vanguard Dividend Growth Fund Investor. The Vanguard Dividend Growth Fund Investor, VDIX, $37.86, can be an attractive value play in 2022. This is particularly true for investors looking for an actively managed mutual fund that offers exposure to a diverse mix of dividend-focused companies. You won't find many high-quality, actively managed mutual funds on the market with expenses below 0.30%. Couple the low fees with a portfolio of value stocks, and you get a recipe for a solid choice for the equity portion of a portfolio built for 2022. The VDIX portfolio consists of 42 large-cap stocks with the highest allocation weights given to industrials, 20%, healthcare, 20%, and consumer staples, 17%. As such, shareholders get quality holdings like discount retailer TJX companies, TJX, blue chip insurer United Health Group, UN, and consumer products giant Colgate-Palmolive, CL. With this fund's dividend focus, you're not going to see many growth stocks, which means you won't see as much short-term volatility either. But fund manager Wellington Management still pulls off solid returns in the long run, which makes VDIX one of the best Vanguard funds to own in 2022 and beyond. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.